Good morning, ladies and gentlemen, and welcome back to the third and final day of AFME's fourth Compliance and Legal Conference, our first virtual conference. I'm sure you already know me, as you've probably seen me for the last couple of days, but if you're joining us new today, my name is Louise Roger, and I'm the Director of Compliance at AFME. Before we begin today's programme, I've got just one practical technical point that I'd like to raise. Could I just ask you to have a look at the time zone slide, which you should be able to see on your screens. And what we're doing here is we want you to be able to participate in all the sessions that take place today. If you're configured to the wrong time zone, that might disrupt that. So if you're in the UK, particularly, please make sure that you are connected to the right time zone, and if you're in Europe or outside the UK, you can select your country specific jurisdiction. So just a quick reminder there. On the topic of slides, we've been using Slido throughout the conference. It's a great opportunity for you to engage and ask questions to the panel. You'll also be able to see the Slido details on the right hand side of the screen. There's nothing that you need to do, you don't need to download it. But if you would like to submit questions for the panels, questions for the speakers, please do that. And we'll also be running some polls. We've run some throughout the conference already. So if you have Slido, you will be able to engage and react to some of the poll questions from the moderators and panels. So perhaps if I'll just say some very brief words about the content so far. Over the last couple of days, we've had a really great opportunity to hear from industry experts on the two really key topics that we're all interested in. We've heard about the future and the evolution of the compliance function. We've had a great discussion on sustainable finance considerations. We had an expert panel on financial crime and AML priorities. We had a great outsourcing in financial services on-demand session. We were able to discuss and consider some of the current and future challenges associated with outsourcing. We had an excellent UK and French overview of regulatory enforcement, which was, I thought, very insightful. Another great session that's available on download. So please go to the on-demand section of the virtual conference and have a view of that when you're free. We've also discussed some of the key remaining Brexit concerns. And yesterday we had two excellent conduct and culture panels, one from a practical perspective, led by those in compliance roles at firms, and then a senior leaders industry panel, which I hope if you joined, you found useful. We also delved into ESMA's technical advice on the market abuse regulation review. And we had some excellent demand sessions on IBOR transition and recent developments in the world of data. Today, we're going to start the conference with a keynote address delivered by Verena Ross. Verena is the Executive Director at ESMA. And following the keynote address, there'll be a fireside chat with Tilman Luder, who's head of the Securities Market Unit at the European Commission. And Elisa Menardo will be joining Tilman for the fireside chat. Elisa is the Director of Public Policy, Europe and UK at Credit Suisse. And Elisa is also the chair of the AFME MiFID Steering Committee. Finally, we have some other regulators joining us today. We've got Stephen Hanks from the FCA and Patrice Agues from the AMF are joining the MiFID sessions. So please do stick around for those sessions. I'm sure they'll be very insightful. There's some fun things happening today too. So not sort of lastly, but not least, we'll be having a yoga session at 11 o'clock this morning, at 12 o'clock European time, instead of the usual coffee breaks. So again, an opportunity to energize and refresh for the remaining sessions of the day. What I'd like to do now is give the virtual stage to James Kemp, and James will be introducing our keynote speaker this morning.
Good morning, everybody, and thank you, Louise, for your remarks and navigating us through what is going to be another exciting day of the conference in this new virtual format. And also, thanks very much for organising and working with the AFME team over the last few days to put on what's been a great event. Difficult in these virtual circumstances, but I think there's been a wealth of information and knowledge shared, which is always good to see with some fantastic speakers. Now it is my great pleasure to introduce this morning's keynote speaker, Verena Ross, who, as Louise mentioned, has been the Executive Director of the European Securities and Markets Authority, ESMA, since 2011 and responsible for its day-to-day operations. Verena has, as we all know, got tremendous experience. Before ESMA, she worked at the UK's FSA, where she held various positions in the markets division and was Director of Strategy and Risk, and also then Director of the International Division before she joined ESMA. She was also a member of the Executive Committee and the Executive Policy and Risk Committee. So she has a wealth of knowledge, as we've come to learn over the last few years, working closely with ESMA on many of the regulatory dossiers that they have put out. She has a privileged insight into ESMA's work. It's obviously pertinent that the latest 2021 business planning document is out just recently and provides a wealth of information as to where the emphasis will be for ESMA. I know Verena is going to talk to us today to some extent. I'm sure there's other areas around MiFID and MAR. And so we welcome you, Verena, and thank you very much, as always, for participating. So over to you. Okay. I can hear. Fine, yes. So I think we just have a few moments here while Verena gets her connection back up and running. So a few areas that I would just like to cover off with people. We will be doing a Q&A at the end of Verena's session. So I would like it if people could use Slido to submit some questions on slido.com. That's always been a great way for us to get questions directly to the key decision makers in Europe. So if you can place your comments into slido.com, that would be excellent. One thing people may be contemplating is what are the main areas that ESMA wants to focus on over the next few years. Those are in the business plan, but as mentioned, we have had the MiFID quick fix, which has provided some insight as part of the recovery package going forwards. And obviously, the MAR review that was recently published, which, amongst other topics, along with MiFID, has talked about research, has talked about share trading obligations, has talked on a number of those key areas, and also touched on the topic of pre-hedging, which is always a source of discussion, again, as it needs to take into account the views of buy side, sell side, etc. So those are some key areas that you may want to be contemplating as we move into this. As I say, we're just trying to get Verena back up and running and connected. Many of you will have logged on Wednesday and joined us for the discussion with Robert Ophel, the chairman of the AMF. Clearly, he flagged a number of areas, particularly around transparency, that will form part of the debate in terms of the ongoing discussion about how you calibrate those areas. Again, that's one where the views of venues, the views of sell side and buy side all come together to get the right mix of transparency and the mix right in terms of what should go through venue and SI or what should remain on OTC. And as we know, those things are very much a question of choice for market participants about how they want to carry out their transactions. So those are also critical areas. And Verena may have topics, maybe able to speak on those, but also we have Tilman Luder coming on later today with the chair of our MiFID committee, Elisa Manado. And Tilman has been instrumental in putting forward many of the MiFID ideas, and much of the legislation that has been out has come from there. So we would welcome questions for Tilman later on this morning. Okay, so just while people are waiting for Verena, just to let you know, we're going to take a short break let's call it a techno break while we try to get Verena back up and running. But please do, given what I've just told you there about the topics that we have, it will be great to see your questions coming in, and we'll join you shortly. Please stand by, as they say in the tech world, for Verena in a few minutes. We'll see you shortly. Grab a coffee. We'll be back in a minute or two. Many thanks. Good morning again, everybody. Well, after that quick tech break, we are back, and I'm pleased to say that Verena is back up and running, so we're delighted. Let's kick off straight away in case we lose her again. Verena, over to you for your keynote. Many thanks.
Good morning, James, and good morning, ladies and gentlemen. And I hope we will stay together for the next 20 minutes, half an hour. It's a great pleasure for me to be here with you on the 4th Annual European Compliance and Legal Conference, and I would like to thank AFME for inviting me to give this keynote speech, and very happy to talk to all of you today. We are experiencing today a very different world than the one that we were used to only a year ago. The COVID-19 pandemic has clearly changed the way in which we work, interact, and communicate, as is also shown by the successful virtual conference, even with a few technical hiccups. In light of these circumstances, I think no speech can omit the pandemic, which has had a significant impact on the economy and the financial markets. I would like to use this opportunity, therefore, to briefly look back at what ESMA has done in the last 6 months, both from a policy and from supervisory perspective. This conference is also very timely for me to raise two key topics you have already discussed or will discuss in other sessions. That is the review of the MiFID/MiFIR framework and the market abuse regulation. Finally, we have just at the end of September, as every year, published and submitted to the European institutions our annual work program for next year, and I will therefore finish my remarks with a short outlook on the key priorities for ESMA in 2021. But let me start on the impact of COVID-19. The pandemic and related government measures severely impacted the economy and the financial markets. As the bulk of the work has been done remotely, the COVID-19 outbreak highlighted the role of proper business continuity planning and increased reliance on the use of digital technology that comes with its own risks and challenges. From the start, ESMA took a number of regulatory and supervisory actions in its remit to address the issues arising from this extraordinary situation. We actively coordinated the work of the National Competent Authority by prioritizing and deprioritizing supervisory activities and clarifying the application of the regulatory framework in these very specific conditions. In addition, we issued a number of statements that provided operational relief to firms. To mention a few examples, we clarified the guidance on call taping and best execution reporting under MiFID II and postponed various reporting deadlines. At the same time, we considered it necessary to remind firms, however, also of their conduct obligations in these specific market circumstances. On short selling, ESMA decided to lower the reporting threshold for the net short positions in shares. We also coordinated the action of the NCAs related to the national short selling measures, which were taken by some countries in the acute phase of the crisis. We also provided to the market more time to react to our regulatory products by prolonging consultation periods and reprioritizing our work. Finally, on this topic and looking forward, I think it would be amiss of me not to mention our concerns on the high degree of uncertainty about the medium and long-term economic consequences of COVID-19. This will lead to very fragile market environments going forward that could entail further possible market corrections and a deterioration in financial market liquidity. In this regard, we underlined in our recent Trends, Risks and Vulnerabilities report that financial markets need to prepare for a possible new round of stress and volatility. We continue to live in very unpredictable times, certainly. Turning now to more business as usual aspects of ESMA's work, I want to start on the broad topic of MiFID II and MiFIR, which are the cornerstones of EU financial markets regulation. They are the key pieces of post-financial crisis legislative reform, which reinforce the rules applicable to securities markets to increase transparency, foster competition, and strengthen the protection of investors. It is now over 2.5 years since this legislation came into effect, and it makes sense to look back and analyze what has worked well and what needs to be improved. And I know you will do some of that also later today. While this framework brought about significant advancements to the functioning and transparency of EU financial markets, it is fair to say that, as always, there are areas where a further look is necessary at how the MiFID framework works in practice and whether the objectives of the co-legislators have actually been achieved. By preparing a range of reports on key provisions of MiFID and MiFIR and submitting them to the European Commission that considers our work when proposing legislative changes, ESMA plays a central role in this review. Of course, it should be noted that some more urgent legislative changes are already underway following the Commission's proposal for capital market recovery package, so the quick fix, as it's also called. In parallel, also the latest action plan will bring forward significant changes that will foster the building of the capital markets union. The reports by ESMA contributing to the MiFID review are wide-ranging and have been and will continue to be delivered to the Commission throughout 2020 and 2021. Without getting into too much detail, I want to highlight 4 areas briefly, which ESMA considers particularly important, and I also believe will be of interest to you in the context of the overall review. In our first report in December 2019, we assessed the development of prices for market data since the inception of MiFID II. Our conclusion was clear. MiFID II has not delivered on its objectives to reduce the cost of market data charged by trading venues and approved application arrangements. MiFID II requires venues and data providers to publish data on a reasonable commercial basis, to provide market data in a disaggregated format, and to make market data available free of charge 15 minutes after publication, aiming to lowering the cost of market data. While many trading venues stress that market data prices have been overall stable, data users and vendors complain about complex market data policies and overall higher costs for market data. Due to the mixed achievements of the market data provision, it appears premature to conclude that the current approach has failed completely and should be replaced by an alternative approach such as price regulation. Consequently, we proposed a mix of legislative changes and supervisory guidance to improve transparency and ensure that market data is provided on a reasonable commercial basis. In an environment driven by technological development, the demand for market data and its value is increasing, and it is vital that data users know what they are paying for. In 2021, ESMA intends to deliver guidelines clarifying its supervisory expectations on how the obligation to provide market data on a reasonable commercial basis should be applied. In addition to working on this supervisory guidance, we proposed a number of targeted legislative changes to either the Level 1 or to Level 2 texts to strengthen the overall concept that market data should be charged based on costs of producing it and disseminating the information. Creating an EU consolidated tape is the second point I briefly want to mention. The fact that the cost of data has not improved was also compounded in our view by the fact that no consolidated tape has emerged, which could provide live information on the price and size of equity trades. While MiFID II designed the requirements that would be applicable for a consolidated tape, it did not mandate the establishment of such a tape. Instead, it left the creation of one open to a voluntary market-led initiative, which ultimately did not materialize. For ESMA, the main reason why this did not happen are the limited incentives and commercial rewards to potential providers within the current regulatory framework, as well as possible competition by non-regulated entities such as data vendors. Nonetheless, we strongly believe that the creation of a real-time consolidated tape for equities would counter concerns about fragmented access to market data. In recommending the creation of a consolidated tape, we consider a few key factors that would be indispensable to its successful establishment. These include the mandatory contribution of high-quality data by trading venues and APAs, the sharing of revenues with contributing entities, and a strong governance framework. Ultimately, this is a task which will require substantial investment of both time and resources by all parties involved, but one which will benefit both brokers and investors greatly by providing a single source for price comparison. We therefore very much welcome the intention of the Commission to propose the creation of a comprehensive post-trade consolidated tape for equity and equity-like instruments that have been part of the CMU action plan just published. Let me move to another important part of MiFID-MiFIR, which is the transparency regime. Here, ESMA has put forward several recommendations with the aim to simplify the current complex regime while trying to improve the overall transparency for both equity and non-equities. For equity instruments, among our numerous recommendations, there's a focus on making targeted amendments regarding the transparency obligation for trading venues and specifically the double volume cap mechanism. The purpose of this is to limit dark trading by ensuring that the use of certain waivers does not unduly harm price formation. In particular, it sets out threshold limits for trading under those waivers. However, the process is, in our view, too complex. Therefore, we are proposing to simplify the regime and transform the mechanism to a single volume cap. Additionally, in relation to equities, we have recommended a clarification to the scope of the share trading obligation for third country shares to address potential challenges linked to access to liquidity pools. On the non-equity side, the percentage of bonds subject to real transparency is insignificant and remains so after MiFID II. This means that the introduction of transparency to EU bond markets has not really worked in practice as was hoped. To improve this, ESMA has put forward some options to address these shortcomings, in particular regarding the liquidity determination for bonds. Last and by no means least on the MiFID topic, ESMA is committed to ensure that investors can make informed decisions in an environment where they know that they are adequately protected. The broad suite of provisions which aim to achieve this are assessed as part of the review. I want to briefly just share ESMA's views on two key elements here. As mentioned earlier, some proposed changes to MiFID are being accelerated as part of the Commission's proposal for capital market recovery package in response to the coronavirus pandemic. One of the proposals includes to roll back the research unbundling rules and suggest that permitting the same provider to conduct brokerage and research will foster research coverage, especially for small and mid-cap companies. While we share the concern regarding limited SME research coverage, I should be clear that we have not observed any evidence which indicates that there is a reduction in research coverage due to these rules, nor any sign that they have had a specific detrimental impact on coverage for SMEs. On the contrary, we deem that these rules have had a significant positive impact on the pricing of the execution services and that they have addressed a fundamental problem of conflict of interest. So while we agree that we should work collectively on improving research coverage of SMEs, we do not believe this should be done by effectively making void this important requirement. Moreover, some of the thresholds being considered for when these services can be bundled again would basically not just target SMEs, but the large majority of listed companies. We hope that these views will be taken into account during the legislative negotiations. Finally, I want to briefly mention here, as part of the MiFID review report on investor protection that we published in April, we recommended that the Commission conduct further analysis on the topic of inducements. We also proposed some changes to the regime mainly aimed at improving clients' understanding of inducements. So we believe that further analysis here would be very important to focus on what impact a ban on inducements would have on the different distribution models throughout the EU. We certainly stand ready to further work on this important topic. Let me now move on to the market abuse regulation. I know you've already had an in-depth discussion of this topic yesterday, but I thought it would be a good opportunity to highlight some of the aspects from our market abuse regulation review report that we've just published. Overall, we have concluded that the regulation works well and is fit for purpose. Consequently, the vast majority of the changes that we propose to the European Commission represent an evolution, taking into account the experience of its application rather than a revolution or radical overhaul of the framework. For example, we make proposals in relation to further guidance on inside information, clarifications on the market soundings regime, application of MAR by collective investment undertakings, as well as simplification in the area of buybacks and their reporting. We recommended no amendments to the general definition of inside information. We believe that the current broad definition is effective in preventing market abuse. We will, however, provide further guidance on the application of the definition as part of our Level 3 work in order to address some apparent difficulties in the practical application. With regards to the delay of disclosure of inside information, again, while we are not proposing any changes to level 1, we will further clarify the interaction with the prudential requirements. This is the reason why we plan to review the existing guidelines on delayed disclosure under MAR to cover explicitly the information conveyed in the supervisory review and evaluation process, the SREP process, to issuers that are also credit institutions. In addition, ESMA proposed changes to the legislation when the requirements of MAR were considered by market participants to be unclear, such as changes to the market soundings regime and application of MAR by investment funds. At the same time, we proposed simplifications to reduce the operational burden of the regime. Finally, we've decided to propose simplification in several aspects of the MAR regime, such as reporting mechanism on transactions on buyback plans. Before passing to another topic, I would like to highlight another important set of proposals we've made recently that are partially linked to the MAR review. ESMA finalized its inquiry into the so-called cum-ex and other multiple withholding tax reclaim schemes. Following revelation of alleged large-scale tax fraud schemes, ESMA was tasked to undertake an inquiry on this issue from the perspective of market integrity. While these schemes are primarily a tax-related issue, and thus regulatory or supervisory responses need to come from tax authorities, we cannot ignore the legitimate expectations of the public with regards to the integrity of financial markets and acknowledge the damage that the use of such abusive schemes can do to this integrity. As a result of the inquiry, as part of the MAR review, we have suggested legislative changes that could facilitate the work of financial supervisors in helping to identify and pursue such schemes. We have therefore proposed to the European Commission to remove the legal limitations for the national competent authorities to exchange with tax authorities the information obtained through their cooperation and information exchange mechanisms with other NCAs. In my view, it is very important to develop a common approach and provide legal certainty for the NCAs to be able to share relevant information with tax authorities on a timely basis. Together with other recent measures in this area, I believe our findings highlight again the need for firms to have efficient control systems in place, like in the area of money laundering, in order to prevent and report possible illegal behavior. Before concluding, let me briefly look a bit further ahead and highlight some key ESMA priorities for next year, which we've just published as part of the 2021 work program. The current uncertainty about the development of the pandemic and its impact on the economy and financial markets obviously makes planning inherently difficult. And as such, priorities might well need to evolve over time. But for now, our focus for 2021 will be on actions addressing the current situation and supporting recovery, as well as progressing on our regulatory and supervisory activities in order to contribute to the medium and long-term objectives of the EU. For 2021, we set out our planned activities to respond to the key challenges faced by the EU capital markets. This includes, besides helping to support the recovery, support of the green transformation through promoting sustainable finance and long-term oriented financing, contributing to the development of a large retail investor base to support an efficient capital markets union, and addressing the risks and opportunities posed by digitalization. The pandemic has increased significantly the focus on the use of technology in the financial markets and the security of the data. In 2021, we will continue our focus on ensuring effective supervisory convergence and give high attention to investor protection issues. Furthermore, our focus will be on execution of new powers and responsibilities that ESMA has recently been given, including direct supervision of certain systemically relevant third country CCPs. We will also need to prepare for the new direct supervision mandates of certain benchmarks and data service providers that will begin in 2022. As already discussed, in the area of MiFID and MiFIR, We will continue working on supervisory guidance with regards to the cost of data. We will also be monitoring the implementation of the tick size regime and position limits set. Moreover, we will continue our preparatory work towards the potential establishment of a consolidated tape, with a particular focus on improving the quality of OTC data. We will also continue providing advice to the Commission covering key provisions of MiFID/MiFIR, for example, in the provision relating to algorithmic trading or the functioning of OTFs, on which we just published a paper for consultation. Finally, with so much happening regarding new or changing legislative frameworks, and with the EU still in crisis and recovery mode, one would be forgiven for forgetting that the story of Brexit continues and will reach a critical point at the end of the year. While the outcome of the ongoing trade negotiations remain uncertain, either way, that will not change the fact that from 1st January 2021, UK firms will no longer have unfettered access to the single market. We have spent much time, as the market and the regulators over recent years, preparing for many different Brexit scenarios. But it remains important that all market participants finalize their preparations for this change and manage any possible disruptions effectively, in particular by keeping customers informed of any impact. We are confident that the potential financial stability risks have been mitigated, in particular through the recent equivalence decision, which permits continued access for EU clearing members, to UK CCPs. However, despite all these preparations, certain disruptions at the end of the year will probably be inevitable, but should be manageable if market participants are comprehensively prepared. In 2021, we will obviously continue to work with other European bodies on the future relationship with the UK regarding financial services. Ladies and gentlemen, let me conclude. Despite the large number of challenges stemming from the pandemic and Brexit, the financial system has recently shown a good level of robustness to withstand shocks. While in the short term, we might need to prepare for possible further market volatility and disruption, our focus at the same time needs to be on the longer term and the main objective of building an efficient capital market union that works for the European economy, supports recovery, green transition and digital transformation, supports competitiveness, but at the same time provides adequate protection to investors. For me, effective regulation and supervision of the financial markets, amongst others, through further development of MiFID and MAR frameworks and their efficient and consistent implementation, is one of the ingredients to making the CMU project a success. And with that, let me finish here. Thank you very much for your attention.
Fantastic, Verena. Thank you ever so much, as always. And you've once again demonstrated your tremendous grasp of the vast quantity of topics that have perhaps grown in ESMA's last 10 years under your leadership. A few questions, if I may, that I would like to touch on. CMU, these sorts of areas, you've touched on the supervisory convergence question. Going forwards, as we move into that, do you see greater alignment between the different NCAs, sort of less delegation to national competent authorities, more centralized guidance, etc., coming out of ESMA? How do you think that may pan out the next few years?
Indeed, supervisory convergence and the kind of greater coordination, cooperation, and consistency of supervision at national level is one of the key focus points for us. It has been for the last few years, and it's clearly further increasing. And the new changes that have come with the new ESMA regulation have also put further emphasis on this. And we are in the middle of trying to implement that and making sure that we collectively, as the NCAs, the national supervisors, together with ESMA, have a better common view of what are the key risks in the market, where are there potential issues, because we have different approaches, and how can we make sure that we consistently and commonly assess those things and react to them and deal with them. So, for example, we've done a lot of work over the last 6 months in the area of investment funds, which was clearly one of the areas where there was a lot of stress due to the COVID crisis. We have collected data centrally at ESMA, trying to look at what is happening in the different national markets. We've worked together to try to ensure that we take common actions. We have identified that we need greater consistency, for example, in the implementation of liquidity management tools by funds. And all of that will be a key priority for us moving forward. But that is just one example. We've also fundamentally strengthened the way in which we will do peer reviews. A first example of that is the peer review we are currently conducting on the Wirecard case. But there's generally a number of areas where there will be greater strength and greater convergence push over the next few years.
That's great. And actually, you beat me slightly to the punchline there, because one of the things we obviously see with digital finance, the emergence of new players in the market, is this slight blurring between what we might call markets regulation, and you also touched on the tax questions with the CumEx, etc., and financial crime. How do we see that sort of better or more integrated approach, perhaps, but as we see these new entrants into the market across things like financial crime, markets, etc., to ensure that we have a holistic view of some of the new entrants in the market?
I think that's one of the key challenges, clearly, for us as regulators and supervisors, where we really need to try to be more proactive. I think it's a number of different things that we need. One is expertise. These are also genuinely new areas where we don't necessarily have the right knowledge and capability base. We need to really gather the intelligence collectively as the system of European supervisors and financial markets regulators. And I think it's very important that we don't look at that in isolation on a purely sectorial basis, on a very national basis. We need to find common European solutions here to identify the risks and to deal with them. At the same time, and as you mentioned, the tax issue, it's also about good information sharing, even beyond the financial services narrow remit, with other authorities that are working on security, IT, technology type sectors. And obviously there's the debate also at how we make sure that we properly connect law enforcement, public prosecutors, and all of those type of entities that are still very important in ultimately making enforcement and sanctions in some of these areas work as well.
Yeah, no, that makes sense. Sort of jumping around a little bit, because you covered such a broad set of topics, and diving into some of the details, MiFID, MiFIR 2, quick fix, etc., etc. One of the topics is, and Robert, I mentioned, had talked around this, the transparency regime, shared trading obligation. Clearly, there's a balance there for between buy side, sell side venues, and you talked in your speech about the sort of the power of sort of centralized, potentially the sort of the power of that centralized pricing mechanism in terms of venues, etc. Does that create sort of the wrong dynamics? But how do we make sure going forward that the transparency regime is properly calibrated? Because there's different interpretations, aren't there, of the data in terms of how much is traded on venue, dark pools, lit pools, etc. What's the best way for the industry, and I mean the whole industry, to come together in trying to get the right interpretation before policy decisions are made? Is that an ESMA decision or a Commission decision?
I think it's really a collective effort, to be honest, because it is about, on the one hand, genuinely understanding how the market works. And for that, I think we are already in a far better position than we were a couple of years ago, because now we have a good set of data through the MiFID reporting, which really helps us to look at some of these issues. It's still not perfect. I was talking about the emphasis on particularly improving OTC data still, but we have a far better picture of how this actually works now than we had before. And we are clearly needing to work together to collect that information, to really understand also what the balance is between liquidity, transparency, and how to make sure that we create the right framework that allows markets to work well, but also allows markets to be genuinely more transparent. I think we all agree that at the moment in the fixed income markets, certainly when it relates to some of the fixed income markets, the transparency is not where, even in some countries where it was before MiFID, which is really a slightly contradictory effect.
Yes, and I know that on the equity side, there's definitely discrepancies around, or discussions around what is accessible liquidity, et cetera, et cetera. That brings me, and perhaps we'll tie that into one of the questions that come in from the audience around the STO. That will that be accepted in time for January 21? Sort of questions around when things will be implemented.
Yes, I mean, we are working on that actively at the moment. As you saw, in our MiFID review, we proposed a potential change to the legislative framework, but we are also actively working at the moment with the NCAs to see whether there's something that we need already to make public now about our stance on this particular topic, because obviously it's important to give some clarity before, and as soon as possible before the end of the year.
I was told I could steal a little bit of time from the networking break because of our let's call it our mini tech break we took earlier on. So, question that's sort of rising to the top of the pile here, which combines a number of things we've already spoken about. The market in crypto assets. Obviously, that takes us into the whole new world of crypto assets, digital, etc. How do you see that progressing? I mean, it's clearly going to be complex, but we need some form of taxonomy for people to be able to deal and work in these. And there's tremendous opportunities, but threats. I mean, that must be rising to the top of the ESMA pile, I would imagine.
Definitely, as the whole kind of digitalization kind of agenda, which has so many different facets, but crypto assets is clearly a very important part of that. Here we are working also very intensively with EBA, with the Commission, with others, because again, it's not easy to kind of split these things into neat piles of our current regulatory framework. On the crypto assets itself, there's obviously the legislative proposal, which has now come from the Commission in relation to that, which follows up many of the recommendations that we have made about greater clarity of how some of the existing legislation applies to crypto assets, but also how some of the crypto assets that don't currently fall into the regime, how do you deal with them? And what do you do? So this is something we will spend a lot of time on. We've got a number of specific mandates for technical standards under that legislation proposal. And clearly we'll see how that develops over the negotiation process. But in the meantime, already we're actively working with the NCAs to look at specific examples of crypto assets when it comes to prospectus approval, fund investment, kind of secondary markets trading, and all these type of aspects.
Yes, I mean it's very complex, and whether to the extent to which existing regulation can be used is obviously probably a better way. But of course, there will be extensions to the regulatory perimeter, I'm sure, and that's going to be a question mark. Ranging across the Atlantic here, question coming in from the audience, which is again, I suppose, about coordination, which is ESMA's coordination efforts with the US regulators. How is that progressing? We've seen various equivalence type discussions going on. Where are we with those sort of discussions now, Verena?
So we have a very lively and intensive exchange with our US counterparts, in particular the SEC and CFTC, clearly. And there it's in a number of different fora. On the one hand, you have the international dimension of the international regulatory bodies, IOSCO, FSB, where we very closely work together on trying to find global common principles. But then it goes into very specific bilateral discussions as well on particular topics. I would just highlight here in particular the discussion with the CFTC on the CCP supervision and how to ensure that also the US CCPs that are providing services in the EU provide information to ESMA to be able to continue monitoring their activity. And at the same time, obviously, clearly rely on the CFTC as the home regulator of those entities. But there are wider issues around trade repository reporting requirements, for example. How is that done with the SEC on CRA supervision? We are probably the two main jurisdictions that supervise the global CRAs, so a lot of interchange there. There's a lot of very active and regular discussion.
Very good. I'm conscious I've taken my 5 minutes and I've taken up your time, Verena. I would like to say a huge thanks from AFME for all the work that you do at ESMA, and for the fact that you've been willing over the years to engage with us. I realise there are changes afoot within ESMA and for you as well. So perhaps it won't be in your current role that you talk to us at future AFME events, but I very much hope that it will be in some capacity somewhere in the market, of which I'm absolutely certain. But a huge thanks from AFME for all of these interactions we've had over the years. And we wish you all the best in whatever the next things are. I realise things haven't changed yet, but best of luck. But thank you again, Verena, for all your time. Exactly.
Thank you very much, James.
As we know. Thank you very much, Verena, and have a good day. Thank you, everybody.
Thank you very much.
And we'll now move back to Louise.